Welcome to the platform of USTM IAS Academy. Myself, HS Sidhu, Director of the Academy. The outflow of foreign portfolio investment during the first 4 months of 2026 is approximately $23.2 billion, which is approximately equal to rupees 1.92 lakh crore. So, such a huge foreign portfolio investment from the Indian economy is very significant. That is why it needs to be discussed. And in my opinion, this topic is very much important from the perspective of the UPSC Civil Services Examination as well as the State Civil Services Examination. In today's video, we will discuss what is the foreign portfolio investment, how does the foreign portfolio investment, which is called the FPI, affect the Indian economy or the stock market in India, and what are the reasons behind such a huge outflow of foreign portfolio investment from the Indian economy. So, first of all, what is the foreign portfolio investment? So, foreign portfolio investors, first of all, are those who invest money into the securities in a country abroad. Their main purpose is to invest money, wait for some times to rise the value of the securities in which they have made investment, then to sell the securities, make a profit, and move away. So they are in a way the passive investors. They have no interest in the active management of a corporate unit or a corporate body. They never try to gain the control of any business unit in a foreign country. And there is another term that is the foreign direct investment, which is known as the FDI. FDI is different from FPI in this respect only that the foreign direct investors are the active investors. They make investment in a country abroad just to gain control of some business unit, and their purpose is to stay there for a longer time. So this is the main difference between the FPI and the FDI. So now, as far as the this effect of the FPI or foreign portfolio investment on the Indian market is concerned, so number one, when the foreign portfolio investment comes into India, so then obviously it provides liquidity to the securities market in our country. And when we see the outflow of the foreign portfolio investment from our country, so then we see the liquidity crunch in the security market of our country. And the second important thing is that when a huge amount of the foreign portfolio investment comes to our country, then obviously the demand for securities, that means bonds, shares, etc., etc., shall increase, and that will lead to the increase in the prices of the securities market in our country. And when there is the outflow of the foreign portfolio investment, then obviously there will be more sellers than the buyers. So then the prices of the securities shall come down, and it will lead to the fall of the indices of the various that you can say stock exchanges. So this is the second consequence of this. That means the foreign portfolio investment derives the value of the securities in a market. And the third important point is that when the foreign portfolio investment comes to our country, then they bring the money in dollar form in our country. So then it obviously contributes to the foreign exchange reserves of our country. But on the other hand, when the foreign portfolio investment outflows from our country, so then obviously it will lead to the decrease in the foreign exchange reserves in our country. And the next important point which is there, that is the effect on the Indian rupee. When the foreign portfolio investment comes, so then obviously the demand for rupee shall increase, because the foreign portfolio investors shall bring dollars into India, and they must have to convert those dollars into the Indian rupees to buy the securities in our market. Then obviously the demand for rupee shall increase, which will lead to the strengthening of Indian rupee. But uh, on the other hand, when they withdraw their capital from the Indian market, so then the demand for dollars will increase, because they will require more dollars now to withdraw their capital from the Indian market. So with the increase in the demand for dollars, so it will cause a strengthening of the dollar and weakening of the Indian rupee. So this is the effect of the foreign portfolio investment on the Indian market or on the stock market of our country. Now we are coming on the point that why there is outflow of such a huge foreign portfolio investment from the Indian market in the recent months. The first, which is the most important point, that is the continuous depreciation of Indian rupee against the dollar. So when the rupee is falling continuously against the dollar, then obviously the investment of the foreign investors in the real terms in our country, that is, we can say, eroding, its real value is coming down, because rupee is falling. So when they will try to withdraw their money from the India's market, they must have to convert it into dollars. So they will be getting less dollars by spending more rupees. So therefore, this leads to the fall in the real value of their investment in a way. So therefore, they prefer to withdraw the money in such a scenario when the rupee is depreciating continuously. And the second important point which is there, that is the geopolitical tensions in the world. As we see that India is a major importer of the oil, uh, approximately 85% to 90% of its total oil consumption, petroleum consumption, is, you can say, imported by our country. And secondly, India is a major importer of the fertilizer also. And in the wake of the this Iran war and the blockage of the Strait of the Hormuz, we see that in the beginning of the March, the price of the crude oil, which was approximately $78 per barrel, and now it has increased to approximately $120 per barrel. So when the price of the crude oil has increased to that extent, so approximately 150% price is there now in comparison to the March. So then obviously, because India is a major importer of the crude oil, so then obviously India would have to spend more dollars for the import of the oil from the foreign countries. So if India would invest more dollars, then there will be demand for more dollars in the market, and which will further weaken the Indian rupee. And with the weakening of the Indian rupee, as we have discussed earlier, so the real investment of the foreign portfolio investors would fall, and therefore they would prefer to withdraw their investment from the Indian market. And the next important point, which is there, we can say, that is the increase in the crude oil prices, which I think we have already discussed there. And as far as the geopolitical tensions are concerned, so when there is the, you can say, uncertainty, because India is such a country, it is a major importing economy. So therefore, it is vulnerable to the external geopolitical shocks. So when a country is more vulnerable to the external geopolitical shocks, so then investors would not want to stay in that country in the this environment of the uncertainty which is created by the vulnerability to the geopolitical shocks. So therefore, they start withdrawing their money from that market. So this is the third reason, we can say, third reason. And the next important point, which is that increase in the bond yield in the USA. So in the US market, the bond yield is also quite handsome, which is 4.4% to 4.5% at present. So it is generally seen that when the bond yield in the US increases, so then the investors start with withdrawing their money from the, you can say, other countries, particularly from the, you can say, developing countries, third world countries, and they start you can say parking their money into the safe havens, and US is considered a safe haven. So when they are getting a handsome return from there, so obviously there, you can say, tendency will be to shift their investment from Indian market into the USA market. So the next important point which is there, because investors always want to invest into the sunrise sectors, means the sectors which have a potential of growth in the future, because there they will be getting more returns, and there they will have a probability of getting more profits. So, and in today's scenario, that artificial intelligence, means AI, and the semiconductor industry has a more potential. This industry has a very good future, but in AI, as far as the semiconductor industry, this South Korea, Taiwan, and US, these are the economy which have comparatively better future, and they have, you can say, edge over India in this particular respect. And in India, the AI industry or the semiconductor industry is not that much developed. So the investors are not seeing a better future in India in comparison to the South Korea, Taiwan, or the US. Therefore, they are shifting their money towards those countries by withdrawing it from the Indian market. So these are the various important reasons behind such a huge outflow of the foreign portfolio investment from the Indian market. So I hope you must have enjoyed the information in today's video. In the days to come, we will bring more such informative videos. Be with us. Please follow us, subscribe us. So thank you for today. All the best.